Good morning, good afternoon, and good evening to all of our crypto fans out there. You're here in luck with another fantastic episode of the Deep Q Cast with your hosts in chief, Robert Rizak, Carlos Sendejas, and Matt Reed. Gentlemen, welcome back to the show. How's everyone doing today? Carlos is looking extra spiffy with his beer and fancy shirt on. Man, you're looking
Yeah.
extra snappy today.
Every
got
once
some
in a
kind
while,
of fancy evening outing planned or something.
no, it's just every once in a while, my wife plans some sort of like social encounter for us, and I have to crawl out of my cave and wear something respectable. So we're about to go pop over, and I gotta look like I took a shower every once in a while.
I thought you were about to say that all of your T-shirts and hoodies were in the wash, so you had to go dust off the
No,
fancy
no.
button down. You know,
Listen, ever since I came into crypto, I have a go-to move. My wife ordered about like a dozen like white Henley t-shirts, and I just wear them every single day. Rainer, I like make no decisions. I just pop on the same shit over and over and over again. It makes me very happy.
it's so much easier. It's funny. I've actually gone the route of just having very simple colors in my wardrobe now, just like plain colored shirts and like everything kind of like more like natural colors, so they just easily. And my wardrobe has shrunk dramatically now. It's just like I've got
Yeah.
like four pants, like 8 shirts. It's just like very minimal. I don't have time to think about things
I
anymore.
love it. Yeah.
Yeah. Yeah.
Plus, like, who do I got to impress?
Exactly. Matt, you get drinking anything today? I see Carlos is drinking
I'm
his
nothing. I didn't think ahead for Friday. I'm also driving, going to the movies later. So I wanted to go and see Oppenheimer. Then the wife won, and we're going to see
Barbie.
what's it called? No, I've already done that one. She won that one too. I'm going to see Equalizer 3, which is actually a good compromise. But yeah, bit of Denzel Washington. So.
I mean, I think it's really rude that like how many movies about physicists are they going to make in your lifetime? I feel like I feel
Not
like you guys,
enough. They should make more.
yeah, you guys got to take advantage. It's sort of like I'm sure if they made like a crypto market making movie, Haley would let me go.
There'll be
Love
one
it.
soon about Bankman Fried, won't there?
Yeah,
Yeah.
I'm sure. What's that one guy that played in Social Network? Remember that guy? What was the guy's name? He was in Superbad.
Jesse
Remember
Eisen. Jesse Eisenhower, is
Jesse
it?
Eisen? I could see him playing a Sam Beekman Fried.
No.
Yes, again, like is it you know who I'm talking about? The curly haired guy?
Yeah. It's
Michael
not Jesse
Cera.
Eisenberg. No, it's not Michael Cera either.
I gotta look
He was
this
also
up.
in Wolf of Wall Street.
Yeah. No,
Oh,
yeah.
I
But he
know who
wasn't
you
in
mean.
Social
The guy's
Network.
in.
Yeah, but
You
that guy
said
would be
21
very
Jump
good.
Street.
Yeah. What's that
Yes.
guy's name?
He wasn't in the Social Network then. I got confused.
That was a
Was
different
he?
one. But
A
actually,
different
either
one.
one would be good. Either one would be good. Jonah Hill. You're talking about
Jonah
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 Hill.
Hill.
Hill,
Yeah,
right?
Yeah,
yeah.
Jonah
Yeah.
Hill.
No, was it Social Network? It was. I know we're going off the topic. Jesse Eisenberg. Yeah, Jesse Eisenberg was the guy. I'm like one of them. Actually, Jonah Hill might be better for FTI.
Yeah.
There's
I
this
love it.
game where you can play about for movies where you say the name of someone, like an actor or actress, and then the other person has to say what movie they're in, and then they have to start off another actor or actress with the same first letter, and you have to like chain them together. It's so hard. It's like you can do it drinking as well, but it's like impossible.
Yeah, we used to
Especially
play a similar game. It's
as
called like
slow we
this.
just were then. I think we would all do pretty bad.
Yeah, no. I used to watch a lot more movies, and we used to play a game when I was in like high school called like the 6 Degrees of Kevin Bacon. But effectively, like it was very similar to you. You picked a person, and then you went around in a circle, and someone had to pick, say the name of an actor that had been in a movie or a television show with that actor, and you go until someone cannot name uh, a film or an actor
I'm
that goes
terrible at
along with it.
names. I would definitely fail at that immediately. I could like show you
Like
pictures of
that
people and
dude,
be like
that
that
guy,
dude, that
That
dude.
that
one.
guy was in the show with the
Yeah,
other person that we know.
yeah, the guy,
Had
the
like
guy, the funny guy.
a superhero, and there was jokes.
Yeah, totally. I sound like a dad doing charades.
I mean, not far
Gentlemen,
from the truth, right?
gentlemen, a bit to discuss today. A lot of news coming out, right? With in the ETF land. I know we've talked about some of this stuff in the past, but some big news with Grayscale and the SEC. Also, some news coming out on Uniswap and all with regards to some of the court cases, and then some big news in the ETF land regarding new filings for ETF spot for Ethereum, which is pretty rad. So I like I don't know which we could talk a little bit more. Maybe talk a little bit more. Yeah,
Speaking of like dad talk, it was pretty rad.
it was rad. It
It's,
was rad.
it was totally rad, dude.
Totally rad. I got my. I'm gonna go. Also, what else is rad? My cargo shorts and New Balance white shoes.
Ooh,
Those are also super
love it,
super rad.
love it.
Man,
I heard that you were spending the weekend making sure that your lawn had a nice crisscrossing pattern as well.
oh, that takes. It's an acquired. It's very zen. I put on some.
Takes a lot of work.
Yeah, some Sade. Is that her name? Sade. Just listen to it. Some little. It's nice.
Okay.
Jazzy tunes. Boys, SEC. Gary Gensler seems to be striking out quite a bit on some of these court case filings. I know. I'm sure a lot of folks have already.
As the kids would say, I think he's taken a lot of L's.
Yeah, big time, big time. Although it's kind of interesting. Like everyone, it's great news for all the ETF filers out there. It still is a little bit TB of a lot of the folks that I've been chatting with. It seems like it's still TBD. A lot of folks are still thinking that the SEC could still either deny or delay some of this further, trying to find ways of pushing the can down the road. But it seems like they're running out of options.
I mean, this is the crazy thing about it. I think that you get like a superpower by actually reading the fucking filings, rather than like seeing like the Twitter headlines. Because to be honest, if you read it, like the SEC has very few options that don't result in either them approving it very quickly or ending up in court again. If anything, I actually think that the market is a little bit maybe like snake bitten about exactly what the probability of this is. I think for whatever reason, the crypto market is just like really bearish right now. But that being said, if you actually look at what this court case hinged on, right? There is basically a rule that says you need to treat like products like for like, right? So if the SEC rules on one product and then a similar product is treated in a different way, then basically the rules of engagement say that if they act in an arbitrary and capricious way, then the courts have the ability to basically come back on the regulator and say you're not following the rules. This isn't clear guidelines for people. Like, it's incumbent on you to give very clear rules of the road, and you can enforce those rules, but you need to do so in a reasonable way. So this all started when earlier this year Gary Gensler gave a speech and he invited basically Bitcoin futures ETF applications, and then they approved them. And very shortly thereafter, they rejected Grayscales. So this was in 2022. And the reason that they gave for doing so was that the surveillance agreement that they had with the CME was not a sufficiently large regulated market that allowed them to basically monitor for market manipulation in the spot market. And I think we've discussed this previously, but the entirety of their case hinged on this idea that even though the spot market and the futures market were like 99.9% correlated, the SEC said that they could prove correlation but not causation. To which anyone with a fucking like finance 101 background would tell you that the futures market is 100% correlated with the spot market because it is,
A derivative.
as defined, a derivative of the spot market.
This is an
the
empirical
only
question, though. I don't have the answer to that. That's something I don't like.
no,
Causation
and
and correlation are very different
we
things.
we all listened to the oral arguments. I remember like passing it around our internal chat, and we were all like, "Are you fucking kidding me?" Like the lady who was representing the SEC was, just spouting diarrhea of the mouth, trying to claim that there was no. It's like, listen, you need to have a lead lag between. And I don't even think she understands what a lead lag is, because for reference, a lead lag is some sort of like empirical study that says when one market moves, another market will, or rather, when one market leads, another market will lag behind it and follow suit. And they were claiming like, oh well, a way for you to empirically prove that this is, this has, causation would be to have some sort of lead lag report. Like that's actually somewhat spurious because, I mean, if you think of the way that this market works, if there's a dislocation in the difference between the spot price and the futures price, or vice versa, right, then there is a whole army of arbitrageurs out there who will buy on one and sell on the other until the prices converge and they've locked in some profit. It actually doesn't matter if one leads or one lags. The only thing that matters is that by construct, there is some mechanism in the market that means that if the price of the future gets out of position with the price of the spot, then someone will come in and trade on both markets to bring the market in line. So therefore, by definition and by construct, anytime someone is manipulating one market, right, evidence of that manipulation, whatever it is, will show up in the other market because they are intrinsically tied together. And the courts actually came through. It went to the U.S. Circuit Court, which is just below the Supreme Court in D.C., and their rebuke of the SEC was actually unanimous, right? People were expecting it to be a split case. There were 3 judges that heard it. 2 were Democrats who tend to side with the regulatory agencies. One was a Republican appointee that tends to side with, kind of punting it off to Congress and a more sort of conservative, judicious approach. And we were expecting the Republican one to side with Grayscale. Sri Srinivasan is more of a moderate, and he was sort of the swing vote. And everyone is expecting Edwards, who is the more hardcore Democrat judge, to side with the SEC. So base case was that likely to go in the favor of Grayscale, and Judge Srinivasan would be sort of the swing vote. What surprised the market really was that all 3 judges basically said, SEC, you're wrong. And in very, very, very nice, legal terms, said it defies logic and shows a lack of understanding of the mathematics and underlying nature of the products to say that they are not like for like. So I would say it was actually a very stunning defeat. And so if you think of what is the recourse for the SEC in this, they've been given 45 days to basically decide what they want to do. And they really only have 2 options. They can apply for an on-bank appeal, which is basically instead of the 3 judges, they can sit before all 18 judges on the panel of the circuit court, or they can appeal to the Supreme Court. And given the resounding defeat they had, if they were to go that route, it would likely be further embarrassment, right? Because it wasn't as if it was a split case and going in front of more judges might help them. It was just a resounding defeat. So it doesn't really give them a whole lot of wiggle room to try and appeal and kick the can down the road. And then what has happened next is they then need to basically come back and either accept the application, right, which is, to be honest, deemed to be approved once it reaches the end of its its cycle, which is already come and passed. right?
And that's the funniest piece, isn't it? What Grayscale then reminded the SEC
Yes.
that they've had this application in since 2021, and the S1 filing, and they're like, guys, we still haven't actually got an official approval, and then the courts have sided with us that you should have passed this already. So
Yeah.
they're trying to argue that by default that they should already have the
Yeah, but it's actually sound argument
Yeah.
because the way that these applications work is that you have like a number of different periods for the SEC to kick the can down the road, and if by the final like acceptance or rejectance period they do nothing, it's deemed to be approved. So by having it go through the entire cycle and then having the court vacate that rejection, they've effectively let it go to the end of the cycle. So by normal rules of the road, it should be deemed to be approved, unless the SEC can find some plausible reason to reject it. And Grayscale has basically said, listen, like if you were to find another plausible reason to reject this, then like it would have come out already. You would have told us in the letter. So it's unlikely that you're going to come up with something right now. And the SEC, to be honest, can't really afford to come across as like being really petty, because if they were to come up like, oh, we found this one little loophole now and this is the reason why we're going to reject you, it just looks silly for them. So I think they really are in a rock and a hard place, and I would say my base case is that they approve this sometime between now and October 15th, which is their date that they have to appeal.
Definitely looks like the case. It's like we talk about plausible reasons to deny, and one could argue that even what they put forward to the courts wasn't really plausible, to your point. Like, it just defies logic, right? So it makes you wonder, like, obviously, we've talked about this before, tinfoil hat on, but like a lot of this is largely politically driven, one could imagine, because of the lack of logical arguments for denying these applications. So I kind of wonder, if you're reading between the lines, what type of pressure is Gary Gensler getting from political parties or political affiliates to continue to press on this, even if it's, detrimental to him. But to your point, like, he's running out of options. Like, it's really getting to a point where I know that there are letters being put forward by very influential people within politics and business, suggesting that Gary Gensler resign from the SEC. So he's running out of options for sure.
Not only that, like there is a there are articles. There's an op-ed in Bloomberg where they basically, as a staff said, like, what are you waiting for? Just approve this. You're looking silly now. CNBC had the exact same color, right? And these are pro-establishment journalists, right? That aren't necessarily like on the Bitcoin bandwagon historically. If anyone has ever subscribed to Bloomberg and gone to their crypto section, I think it's pretty fair to say that their editorial staff are not particularly pro crypto. So for the fact that like you've got these types of right, the fact that you have these like old guard firms basically saying, hey dude, you're actually just looking like a sore loser now. I don't think he's got a lot of political bandwidth to do it. And he's also now starting to take on high frequency firms, and most importantly, he's also got a lawsuit pending because they're trying to take on private equity firms. So I mean, he's kind of fighting a losing battle across multiple fronts, and I don't think he really has the political bandwidth to keep this up.
Yeah. It's kind of interesting. Maybe we could touch on too, just like the overall markets, right? Because when the news broke, I know there was a pretty big bounce, I want to say, in the crypto markets, and then things kind of like it looked like traded largely back in line after the pop when the news came out about the Coinbase SEC ruling.
Yeah, exactly. Was it to Friday, Carl? So it rallied after the announcement, then it came to the weekend. There was just a massive market order at the end of the day, which pretty much wiped out a lot of the gains, a lot of futures liquidations, just stuff we've been seeing a lot of lately anyway, with a relatively thin liquidity as a whole, and big guys with some cash to spend can move it around, liquidate futures pretty easily, and probably make a bit of cash on the side doing it.
Surprises me, just given the fundamentals, like, right? I mean, this is a pretty big fundamental driver, right, for the value in it.
As Carlos said, with the XRP, and then people got burnt with a lot of sell pressure, and then that's people probably don't want to do that again until these things are actually, all resolved. And
Mm.
it's now, once these ETFs get approved, I think we'll see the upside.
Yeah,
But
I think
we were definitely more
that
skeptical.
that's the key. I think the market really got over their skis after XRP,
Yeah,
and the price rallied. A lot of people got long, and I think in a market that is thin as Bitcoin, because a lot of people don't really understand how thin liquidity is on Bitcoin. As a case in point, you can, if I were to open up Coinbase right now and just see how much liquidity I would need to market buy to move the price up by $1,000, it's probably like 5 million. So that might sound like a lot to the average retail investor, but I mean, I won't speak for Matt, but in the FX market back in the day, like 1 million was the minimum order size that I would take. And people would routinely do, 100 plus orders in like, full amount, one shot, and the market would digest it. So if you're a large TradFi participant sort of playing in these waters, and you realize that, the market, basically all the retail guys are long leverage because they've traded the news. And they say to themselves, what could go wrong? Right? Like the court has, given us this win. Well, a lot can happen in between the time that the court gives you the win and it actually becomes reality. And so if you get over your skis and you get long on leverage, it doesn't really take a lot of capital for someone to come in and basically say, cool, well, to be honest, the market's super exuberant right now. And it might take me like $10 million to push the market down 10%. So even if I'm long-term bullish, this is a tactical opportunity for me to push the market down and make quite a bit of money. So, I can definitely see why the market's a little bit, gun shy about this. So it's kind of an interesting opportunity because we're dealing with a situation where the likelihood of these ETFs hitting is near 100%. In my personal view, right? Just given the court momentum that we have and the way things are currently going. I think if you look at, BlackRock's track record, you look at the court, cases that have been piling up, it's very unlikely this thing, does not get approved between now and March of next year.
Yeah, and there have as well been systematic flows that we know have where people are selling. So it's not just necessarily games with people spending 5 to 10 million to push the market around in future liquidation, stuff like that. But there are people that actually want to sell, like the DOJ, massive balance sheet. We saw that after XRP. You've got now the FTX US towards the end of the year have said they're going to have to liquidate, I think it's like 200 million. So not a crazy amount, but still a sizable.
It's up to 700 million of Bitcoin and Ethereum that they've got to sell between now and the end of the year, which in crypto terms is quite a bit.
It's a fair amount, yeah. So there are definitely flows of people, and they're just the ones we know about, right? But there's definitely flows that could add to some sell-off pressures as well.
Yeah. But that being said, we're currently trading at a price that is at or below where the market was before the BlackRock ETF was announced.
Yeah. Exactly.
So if you think about sort of the reality of where we are in the world, I personally think that given the liquidity shock, if this thing gets anywhere near the inflow that we suspect it could have, right? Like we're seeing an alarming amount of Bitcoin being taken off exchange. So there was as much as 1.5 million Bitcoin on exchange at the peak of the bull market. It's gone down to about 800,000.
When you say on exchange, is that in like AMM pools, or is that in like Coinbase wallets?
I'm talking about like if you look at like Coinbase and Binance hot wallets, like the amount of stuff on exchange, and not all of that is actually available for sale. A lot of that's probably like retail guys that treat their Binance account or their Coinbase account like it's their cold storage, which may not be the right thing to do, but a lot of people do that. So whatever percentage of that amount of Bitcoin which is on exchange that is available for sale, like it's max 800K right now. So something along the lines of like 2% of the free float of total outstanding Bitcoin available is available for sale, and that has gone down dramatically over the last year, and it continues to go down every single month. you're seeing massive outflows of Bitcoin into cold storage, which actually sort of suggests that institutions are buying and putting it into custody, because a lot of retail people end up just sort of like taking it and leaving it on exchange.
Yeah.
So, I mean, there is the room for massive supply shock. So you sort of get this thing where it's like, Bitcoin could very easily go to 40K plus, like in the blink of an eye, once BlackRock and Fidelity and ARK and all these people need to come in and seed their funds, because they need to actually physically seed the funds with capital before they can launch.
And on
like
that,
yeah, go
sorry,
for it.
no, I was going to say on that we've also had the ETF spot applications as well.
Yeah.
So I don't know if you want to touch on that now.
Yeah, absolutely. That's pretty big news. It looks like there were a couple of filers, right? It kind of fell into sequence. ARK was the first one, though, I believe, and then there was a few others that came in.
Yeah. So it's been ARK and VanEck right now for Ethereum, which is an interesting case as well.
Yeah, and then
we had a similar thing. We had some small price rally, which looked pretty decent. I think it's like 4% or something, and then we just kind of got wiped out at the end of the day.
Yeah,
which seems to be the theme as of late.
And that really just follows. Do you guys think that this is a result of? It's probably a result of court filings. It seems like cases are moving in favor towards approval, and given I know SEC has been a little bit what's the word, wishy-washy on how they delegate, how they would think, their stated opinion on whether ETH is a security. I know they said it's not, and then they wouldn't address it anymore. But it's just kind of like, it sounds like folks like ARK are putting their flag in the ground, saying this is it. We think this is going to move forward. SEC has lost ground.
Yeah, this is actually. I think this is actually a bit of a FU to the SEC.
Yeah.
No, seriously, because in May of this year, people tried to file for Ethereum futures ETFs.
Yeah,
and they were like, "No, we're going to ask you to withdraw," and people did because they were afraid of blowback from the SEC. And then, for whatever reason, just like last month, all of a sudden, people started filing for ETH futures ETFs, and effectively, what that came down to was someone just said, "Yeah, we're going to apply." And I don't care if you ask us to do it, because we've seen that you're kind of like racking up losses in court. And we think that like we have a good chance to fight this and win. So try me. Otherwise, you're going to have another arbitrary and capricious lawsuit on your hands. And after the Grayscale spot ETF, you now enter into a case where people kind of connect dots. And they're like, all right, well, if you're going to allow an Ethereum futures ETF, and the courts have just said that a spot and a futures ETF are like for like and should be treated similar, then fuck it, I'm going to throw in an application for a spot ETF, and I dare you to tell me to withdraw it or reject me, because then you're going to see me in court. And in both of these S1 filings, they explicitly mentioned the Grayscale versus SEC court opinion as sort of a come at me, bro. So in some ways, I actually think that like the spot ETF does two things. One, it represents that the SEC, I don't think, has the gas to fight a Ethereum is a security war like it had previously done. If you remember, earlier this summer, Gary Gensler in Congress would not commit to saying whether or not Ethereum was a commodity or a security, because they wanted to leave the option open to prosecute or to regulate against Ethereum as being an unregistered security. And now the tides have completely turned on that. So it's actually kind of like a little subtle gamesmanship that's going on here. And I think that what it indicates is that the SEC is losing its credibility, and people are a little bit emboldened, and that, if they don't get what they want from the SEC, they'll just take them to court and win.
I have a layman's question. That majority of liquidity that you see within the crypto markets is within Bitcoin, right? Like, could there be an argument around a lack of liquidity around Ethereum as being like a valid case for questions around whether you can?
No,
effectively,
I actually don't. No, like you will find that the Ethereum market and the Bitcoin market are actually quite similar in terms of total liquidity. I actually view it the same way as like euro dollar and dollar yen and like the FX market, where it's like euro dollar is the number one liquidity. It's like if you go to FX, maybe it's like 40% is euro dollar, but like 30% is dollar yen. So it's number two, but not that far behind. So I think you'd have a very, very, very difficult time explaining how Ethereum is a fundamentally different market than Bitcoin. And I can actually tell you full stop because, Matt and I do, research on the price between Bitcoin and Ethereum. That correlation is rock solid. And you can almost interchangeably use the price in Bitcoin and Ethereum into market signals, and you kind of get the same result. So, in terms of like for like, you really are kind of dealing with very, very, very similar assets that trade in a very similar way and have almost identical liquidity dynamics.
So as you look at overall market cycles for crypto, right? Like when we go through bull markets, it's when a whole new segment of users decide to come into the market, right? And like to your point about like why the spot ETF for Bitcoin didn't really rally markets, it's thin liquidity. That's because everyone that's already trading in the markets is an existing participant in the market, right? And so people are kind of already. So you're not really going to see. You need an inflow. You need people to go onto the on ramp into the space, and it's like it's a harbinger. Like the approvals are a harbinger for that bull market. So you have like, and you can even split it out even more, right? So you can look at it from that's more of like a speculative aspect of it, right? People investing it because they think it's sound money, they think it's a store of value, they think that there's a use case for it. But then you have all the different scaling solutions that are happening on the Ethereum blockchain. It's getting cheaper to perform transactions on there. So the use cases are growing too. And those are much more deeper fundamentals. So I see like the Bitcoin ETFs as much more of like a technical flow bull case versus not necessarily fundamental.
So I actually have a question for you, both sides.
Yeah.
I have a question for you, because one of the things that I've been seeing a lot on Twitter is this take that like institutions, and I'm going to classify institutions as not hedge funds, not family offices, because those are not really institutions. I'm really thinking more along the lines of like endowments, pension funds, real money asset managers types of situations. And you have professional experience dealing with them. I have heard the take on Twitter, which I, for the record, vehemently disagree with, that if an institution wanted to invest in Bitcoin, they would have already done it and they don't need an ETF. So from your take, what advantages does an ETF have for like a proper institution versus them just going to Coinbase and buying Bitcoin spot?
There are being able to access digital assets through traditional, well-known channels is massive, because if I'm an institution, my primary job is being a fiduciary for the underlying participants in a pension plan, the university that's going to receive payments for a new building. I am a fiduciary for the end users of that capital.
Define fiduciary, just so people understand like the magnitude of what that actually means.
Sure. So I am an employee, and I am acting as an agent for the benefit of others, not for the benefit of myself. I get paid a salary and perhaps a performance-based bonus depending on how well I perform in my job, but I am not the primary recipient of the benefits of my actions. I am acting as an agent for others. So if I'm working at a pension plan, my job is to be a good steward of all the New York City nurses that they have a pension plan. I'm making sure that the investments that are made are sound investments that will provide capital for the nurses in retirement to help pay their bills as they age.
Yeah. To be clear, we're not talking about high net worth people that have the ability to punt on. We're talking about nurses, teachers, retirees for postal systems, state employees, all that sort of stuff. Exactly. Like the level of conservacy here that they have in these types of arrangements as a fiduciary with a financial responsibility to do the best thing for the recipients of that plan is actually significantly high.
Huge. And because of the amount of assets that you are controlling, are managing are enormous. There are a tremendous number of checks and balances to make sure that an employee can't go in and do anything wild with that capital, like punt it, as you mentioned, like within the family office space. There's no punting that happens in this space. You have an investment committee. If I'm working at a large pension plan as a fiduciary, again, making investments, I will put together a plan, a memo that will get presented to an investment committee, and that investment committee will drill me on why we should be making this investment and is this a sound choice. So there are a lot of checks and balances that come into that. And so also you have to think, so if I am in that position, I have a job, I have a bonus. I also have a lot of downside risk. If I invest in something that is a phenomenal opportunity that will 100x, my bonus won't necessarily change that dramatically with that payment, right? There's a lot, but if that thing goes to zero, not only will I get fired, but probably the investment committee that approved it will get reviewed. There could be like state legislation could come in. There's a lot of downside risk for that. So to your point, like you have to be very, very careful. And if I think about like a spot Bitcoin ETF, they're known custodians. ETFs are very well understood. It's been tried and true over decades. It's understood. So the real risk that I'm taking in that is just purely about Bitcoin and its abilities. When I have to invest in it directly, I have to understand how sound is Coinbase, how sound is Coinbase's ability to custody assets. There's a lot of regulatory uncertainty around that. But with a Bitcoin ETF, the institutional side of things is already well known. I can just look at Bitcoin specifically. So it reduces the risks dramatically for institutions when these ETFs come on market.
Yeah, no, I agree with you. And thank you for that, because like I think people need to hear from someone who has actually sold and dealt with institutions before. Because they're not the same as like a hedge fund, right? They're not the same as a family office that has the latitude to do all sorts of stuff. And they can't get away with, oh, like, where do you custody? I don't know. We just pop it in Coinbase, or like we have it in cold storage, or whatever, right? Like the burden of like every decision you make is so high, and being able to justify like, oh, like, we have it sitting on Coinbase, or we have it sitting in cold storage, or we have it sitting on some PM's like wallet or in a MetaMask account, is fundamentally different, right? Than, oh yeah, like it's at BlackRock. BlackRock has it. We're good, right?
Yeah.
No one loses their job over getting a BlackRock like ProShares ETF where they've gone through a full regulatory oversight process and everything is custodied and taken care of properly. So it's like, I think people underestimate sort of like the degree to which these super conservative real money institutions have the ability to allocate capital. And even when they do allocate capital, like what percentage of a portfolio would you suspect that they're going to allocate to something like Bitcoin?
1% to 3%. I think 1% tops. Like if you look at even things that are a little bit more like if you look at emerging asset classes, for example, private credit. So after the great financial crisis, Dodd-Frank regulation came in and barred banks from doing a lot of the investment activities that they did in the past. A lot of what they would do is provide lending to mid-sized companies that needed a $20 million loan. All of that now has been moved to the buy side, to asset managers that are providing that. All of this has happened within the past 12 years. It's an emerging asset class that's pretty well known in the markets, and that currently is about 5% of investor portfolios and growing. I think if you see something emerging asset class like cryptocurrencies, Bitcoin, that could be seen as more of like an inflation hedge or an opportunistic allocation, something like 1%. But this is trillions of dollars in assets that these institutions manage. So 1% can be extremely sizable, especially in a low volume market.
Yeah, and I have one more question for you. I feel like I'm like asking all these leading questions, but you're hands down the most qualified to answer them. And I yak about all this sort of shit, but like it feels nice to actually have someone who knows what they're talking about say it. But like, what role, for example, then does like the marketing and research department at a place like BlackRock or Fidelity or Invesco have in terms of like allowing institutions to feel more comfortable allocating assets to something like, Bitcoin or Ethereum or so on.
What kind of tools does a marketer have to showcase that it is a safer or
yeah, I mean, just does it give any influence? Like, for example, like if we were to say, I don't know, BlackRock now all of a sudden has like a research team giving you, portfolio analysis on what this sort of looks like, and they've allocated huge marketing budgets, and they've got portfolio strategists and white papers and webinars and all sorts of stuff that like they can walk in now to a state pension fund and say, hey, listen, we've actually done some analysis on this. Here's the way it works. This is how it might look in your portfolio. This is how you could size this, so on and so forth, right? Like, does that have any impact in the market, or is that just sort of like extra stuff and people kind of discount that and throw it out the window? What are your thoughts on that?
I think there's a lot of education that still has to happen. It's still incredible how little people really understand this space. So there's still a ton of education that's going to happen. Institutions are notoriously slow to make investments. I mean, these are like massive oil tankers, weighing like hundreds of thousands of tons going through the ocean. They don't stop and shift on a dime. So these are very slow moving institutions. So there's going to be a lot of education that's going to need to take place. And when you think about incentive structures, which, being a UFC grad, that's like what we care about a lot, is just like understanding basic incentive structures. Look, Bitcoin and BlackRock are aligned, right? Like BlackRock wants to see asset flows into that ETF so that they can earn income. And so they're going to do everything that they can to show how that can be used appropriately in a portfolio. So there's going to be, the number of BlackRock employees is something like 25,000. There's probably over, 3,000 salespeople globally that are going to be plugged into this going forward. So it's a huge distribution sales force that's going to be working on this.
Yeah. So I think, like I said, I appreciate your perspective because, I've dealt with institutions before, but you've like really dealt with institutions before. Not to tell tales out of school or anything like that. But that being said, like I think there's like a certain level of understanding versus just someone who's on Twitter being like, oh yeah, I mean, if an institution wants to buy Bitcoin, they've probably already bought Bitcoin, versus like actually having understood what it takes to move something across the line. We're not dealing with people that can arbitrarily decide to do something and then allocate capital the next day. Like this is a grind, it's a process, but the total capital allocation that's out there can actually be reasonably, large. In fact, probably orders of magnitude more than we've currently seen in the space.
And, trust is extremely important. We talk about a lot about in crypto, we'd like a trustless network, which is wonderful. And I'm looking forward to the day where we get to that point at an enormous scale. But people are they need something that they trust, something they can look at and they know that they're going to be treated well, that this is a relatively safe thing. And BlackRock provides that. If you're an institution making an investment, you care about your downside risk, like I told you before. And we actually used to have this phrase, I used to work at BlackRock, the phrase, no one gets fired by hiring BlackRock. It's a very safe way to make investments. And that's why BlackRock is able to accumulate trillions of dollars in assets, because it's seen as that safe resource. So yeah, it's very, very interesting. Super exciting.
Yeah, no, thank you for your expertise. On that note,
appreciate it.
Yeah, dude, I'm pretty excited. I think we've got some like really interesting shit in the pipeline, and that being said, now I have to go be social and put on my good husband hat, and
we've got a bow tie to go on as well.
I love the shirt.
Pop out the collared shirt and the bow tie.
You gonna wear an ascot?
No.
Okay, bow tie, that works.
I mean, we are in Connecticut, so I've got a silk ascot and some suspenders just rocking in the car. Clip-ons, both of them, so don't worry about it.
Beautiful. I want pictures. Pictures or it didn't happen.
Yeah. Done.
See you later, boys. Great chatting.
Cheers, guys.
All right. Cheers. Bye.
Bye.